I think it tells us the U.S. markets are going to be able to shrug off Turkey, but I think the European markets, the global markets, are still very much in trouble. If you take a look at what's happening in currencies today, we actually had the euro fall to a fresh one-year low, all while U.S. stocks are rising. So I think they're looking at it as a regional risk, not necessarily a U.S. risk. So it's just a matter of what you're looking at in terms of whether or not it's stable for the U.S. or has ramifications for the U.S. or just abroad.
Why are we seeing that? Why is it perceived to be a risk for Europe? What is the transmission mechanism? Draw a direct line for me, would you, from the Turkish lira falling to seeing weakness in European equities and the euro?
Well, I mean, there's three primary factors. I mean, first and foremost, it's the fact that the banking sector in Europe is very much exposed or have the primary exposure to Turkish debt. Also, there's a fear that this is going to hit business as well as investor confidence in the Eurozone. And then, ECB policy, it could very well translate into even more delayed rate hike by the European Central Bank. So, Europe is the ground zero for this potential crisis contagion. And I think that investors are most worried about its ramifications there. That's why you're seeing the euro perform as poorly as it has today.
So how high will the dollar index go in your view? I mean, we're also entering a Fed tightening cycle. So how high?
Right. So, the question asked in the beginning of the segment is there a currency to buy? I think U.S. dollar is still the currency to buy. And I think that we could see at least another, 2 to 3% appreciation before we get hit any type of resistance level in the dollar index. And we've got U.S. retail sales tomorrow. That should be relatively good and reinforce the story of how the U.S. economy is outperforming.